My name is Deepesh Patel, editor at Trade Finance Global. Today we are in London at the Trade Finance Investor Day. Now, navigating trade digitalisation is complicated. It's a burden for companies, but no longer just a nice to have. Here to discuss today 4 ways to digitalise trade, I'm delighted to be joined by the Executive Director at ICISA, Richard Wulff. Richard, welcome to Trade Finance Talks.
Delighted to be here. Always good to be with you, Deepesh.
Thank you very much. So, quick introduction, who are you, where are you from, and what do you do?
I am Richard Wulff. I am a Dutchie. And at the beginning of this month, I was 35 years in trade credit insurance. I think that's a bit confronting. Trade credit insurance, surety, and political risk. And that's exactly what ICISA does, the International Credit Insurance and Surety Association. And we count the grand majority of capacity in especially trade credit insurance and surety among our members, both insurers and reinsurers.
Thank you very much, and also delighted to have you on as one of our board members for the editorial board at Trade Finance Global, which means I can start with a difficult question. So, since Donald Trump became president in the United States, discussions on trade have been dominated by his rather aggressive tariff policy, which I think have huge implications for trade and trade credit insurance. But in a wider sense, what role does digitalisation play in helping companies and insurers monitor supply chains for some of those compliance with sanctions?
I think that's a very good question. And the fact that Donald Trump was elected only makes it more current than it already was. Because over the last couple of years, especially since the invasion of Ukraine, we have seen a lot of sanctions, a lot of export controls. Trade digitalization helps to make the supply chain transparent. So I know, where did the goods come from? Where are they going? And is that in breach of sanctions or export controls, which is not as easy as it might sound, because a lot of these export controls are for dual-use goods, which are both for military and for civilian use. Civilian use is not restricted, military use sometimes is, and that's what you need the transparency for.
Thank you very much. And would you say supply chain transparency means different things to say, sellers and insurers?
Look, I think it's largely parallel. Mm-hmm. I think insurers and sellers are very much aligned in their interests. A seller doesn't want to break the law. An insurer doesn't want to break the law. An insurer wants the maximum amount of information and data so that they can price and underwrite the risk very accurately. And the more precision there is, the better it is for the sellers, the better it is for the clients. Cheaper, wider coverage, and that's what transparency does.
So more information and more data. I think that there may be another use case which is in and around ESG and environmental requirements. Can digitalization help satisfy some of those ESG requirements?
Yes, and in my line of business, that's a tough one. Because if you look at short-term trade credit insurance, so your everyday goods that get traded every day, all day, it is not like a grand project in some faraway country where you can really see what the environmental impact of that project is. So if you look at that short term, if you look at all these goods within countries and crossing borders every day, all day, what you need to know is what environmental impact do they have? Both origin, and the example is, do you really want to trade in lignite, the most polluting sorts of coal? Or do you really want to deliver your spare parts or your commodities to a very, very polluting industry? Now, in order to be able to measure that, you need a vast amount of data. And I must say, we're not there yet. We cannot yet say, if you trade these eggs from, let's say, Thailand to Europe, what does that do to the environment? What does the shipping do? What does the handling do? And what does the further processing do? That's what we need the data for, and we're in desperate need of that.
Thank you. So we've talked about transparency of supply chains. We've talked about using data to assess the real environmental impact, particularly in fairly complex supply chains. Let's talk about regulation, in particular capital treatment. And whilst we're on the matter of the US, what specific challenges do credit insurers face in gaining recognition for capital relief under Basel 3.1 or Basel Endgame in the US market?
Yeah, I think that they would call this a $64,000 question. Now, in the US, credit insurance has been bought by banks, but not for capital relief purposes.
Yeah.
It's basically to free up limits, countries, regions, counterparties, because under US law, never mind Basel, whatever version, under US law, credit insurers were not allowed to give capital relief to banks. Now, there is a consultation which will start, run by the Fed, to see whether this is something they can do, they want to do. And we, as a credit insurance community, believe that this is our core business. We can assess those risks, whether it's country or counterparty.
Yeah.
We can give the capital relief. By that, we are promoting loans to the real economy, which is what it's really about, right?
Yeah, no, absolutely. I guess one of the problems and the challenges, and it's been quite an open discussion of today, is assessing risk and reducing fraud, because I think the notion of this morning's sessions with that, fraud is probably here to stay, and it's not necessarily about stopping fraud, it's actually about quantifying fraud and trying to kind of reduce it. How significant is fraud in the context of international trade, and what digital tools or approaches are proving effective in combating it, Richard?
Before I name a number, fraud is sometimes associated with Enron type things. Logios Americanos more recently, right? Balance sheet fraud.
Yep.
It is much more than that. It is fake documents. It is collusion between buyer and seller. And you might have read in the newspaper that one of the big commodity trading houses was hit by possibly $1 billion worth of fraud in the oil business. Credit insurers want to do something about this because they're paying for it, right?
Yeah.
If I look at the quantification side of things, a fintech called Monetago quantified the tip of the iceberg at about $5 billion a year. ICISA UK said, yep, that's the tip. And under that tip, you've got another probably 50 billion of fraud every year, which is being paid by somebody. So we need to do something about this because we're all paying for it, right? Mm-hmm. Now, what can you do about it? You can open trade registries so that invoices are filed with the registry, that an invoice gets financed only once, right? Financing fraud. Much more importantly, I think, is what the ICC is doing in the Digital Services Initiative, Digital Standards Initiative, making digital native documents, bills of lading, invoices, you name it. There's a standard for it now.
Yep.
It's been published last year. And there you can verify if that's the real thing. Because if you look, for instance, at a bill of lading, what we saw, especially in COVID times when everyone was restricted, is that bills of lading were just put under a very standard copier that you and me can buy at home. It was being negotiated at a bank. It was the purest type of fraud, parallel trade. The goods were never exchanged, but somebody was paying for it and somebody was covering it. And sometimes the credit insurers were. So we're interested in countering this. And the Digital Standards Initiative is one very, very good way to do that.
Thank you, Richard. Well, let's talk about data points in trade credit insurance, and we can hopefully drive the standards, and we can digitalize trade processes to make them more measurable. But how can both of these actually impact trade financing?
We talked about data points just now. I try to visualize it like this. If you have to jump over a ditch, and you do that in the dark, you don't know exactly how broad the ditch is. Mm-hmm. You take a really, really big jump to make sure that you don't fall in, right? If it's bright, you can see how broad the ditch is and you can be more precise. That's exactly what's happening here. The more data you have, the more light there is, and the surer you are that you are going to jump over the ditch. That ditch now is a risk. You can price it more accurately. You can probably take more of it because you know exactly where it is and how it works. And this is what digitization does. It creates more data points. What I think is really important and which is close to my heart is if you want to make new products, the more data you have, the more precise you are. And let me give you a very tangible example. I think most of us know that there is a financing gap, which is largest in the developing world and is largest in SME companies. If there is no data, there is no financier, no insurer who is willing to cover all those risks. What a number of parties are doing now is to create that data, Frexen Bank being one of them.
Yep.
So that people come in and say, this is actually a risk that is worth taking, and we want this. By that, we are helping, in this case, to finance the African economies. We are helping to alleviate poverty, a sustainable development goal, actually number one.
Yep.
And that is only done when you have more data, when you have more information.
Thank you very much. So evidently digital solutions are no longer just an option, they're a necessity. So given that, what common standards would you like to see implemented to facilitate their rollout in 2025?
I think the standard is there. I think the standard is MLETR. And that standard has been largely followed in the UK and in France. And let's not forget the developing world, the African economies, which are digitizing faster than the average OECD country.
Yep.
What I would like to see is that everyone speeds this up. Trade is hard enough. Let's take away all these frictions. Digitization does take away the frictions. So what I would like to see is that at least the entire European Union, the US, follow the examples of France, UK, Singapore, and a number of African countries, so that we can start getting down to business without those frictions.
Thank you.
If you can get me that for Christmas, I'd be forever grateful.
I will try. I guess to summarize, trade is complicated, but digitalization for trade really does help reduce the friction, reduce fraud, increase transparency, and really helps with some of those environmental requirements. The standards are there, but the question is how do we use them effectively in 2025? That was Richard Wulff, Executive Director at ICISA. Richard, thank you very much for joining us on Trade Finance Talks TV.
Thanks so much for having me.